currencies. U.S. dollar Canada, let's look in the North American trade zone and see what's going on here. We have the U.S. dollar falling against the Canada for a second day in a row after going pretty much sideways. But this, once again, is in a similar format. This is a corrective move in the midst of a bullish bounce. So this could be the end of the correction and the beginning of a resurgence in the bearish trend that has been going on for months. Or this is just a pause for the cause, and then we'll see where this market goes in the next couple sessions. So I key off the highs there and watch to maintain this trend. So if we take out this upward sloping support, which is pretty vertical, not that vertical, but it's a fairly steep slope, that would have us back on the bearish to neutral campaign. We so far are trading above that, so we don't want to get ahead of ourselves. As far as a target, and this is why you always want to make sure you know what you're looking at. You don't want to sell the market in the hole, that's for sure. Right. Okay, so we still have a little bit of room to the downside for a correction. So just because we're sloping support line here, don't be too overly positive that this market's bearish. So it has a little more volatility and room to go. So we'll see how that shapes up. The U.S. dollar Mexican peso, that's been getting a little strength versus the dollar too as well the past few sessions. This is kind of in the same thing. I think it's lopping around and where it's at, just creating a little volatility between 22.5 cents or pesos and 21.5 pesos. Probably going to be the range for a little while, unless there's some real layoff in the dollar where we start to see the U.S. dollar get hammered by most of the major currencies. Now, here's one that is probably in a buy dip scenario and will remain in one, is the Turkish lira, the U.S. dollar Turkish lira. This thing has had quite the run up this year. Period. And it's going to be very hard to be a bear on this one either. This is the kind of thing that it's probably going to remain in this holding pattern, pressing new move highs for a while. If it was to have a big sell-off like it had back here in May, and then it went sideways for months, that was a grind watching this one. But then once it heated up, it's amazing some of the moves that this had. Now, this is a very widespread market, so be very cautious if you even think about trading this. But here's another indicator of where, as a whole, the dollar is very strong, especially when it starts to come into these bridge currencies between like the Middle East, Eastern Europe, and into China and stuff like that, in the Asia, in that trade zone, where the currencies definitely are not as strong versus the dollar. So if you like this video, please subscribe to our YouTube channel. That way you know when the next one is coming on. And also don't forget to check out the book High Probable Japanese Candlestick Patterns on Amazon.com, available in paperback and Kindle versions. And also remember to check us also out at www.forex-trading-unlock.com. You guys have Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on October the 1st, 2020, the beginning of the fourth quarter, with a Forex market analysis for you. And before we get into the meat and potatoes, we want to just have our disclaimer up here to remind you that this webinar is for illustrative and educational purposes only. So we will be covering all the major foreign currency crosses against the dollar and see how things are shaping up and looking to follow through into the end of the week. So with that, we're going to just give you one quick plug for the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets in any markets. And now let's go to the live action scene here. We have the forex-trading-unlock.com website pulled up, and at the top of our nav bar there's the Forex Trading Unlock Workstation tab, which we already put. And we are going to skip past the numbers for the day, the calendar, and we're going to look at how the dollar index was yesterday. Now, it was slightly lower yesterday. However, it did put up a fight, and it really didn't. It's more of just a corrective move, I think, of what's going on in the dollar. So let's take a look and see how things are shaping up today. So most of the session for today is through. European markets obviously closed hours ago. In Asian markets, we have the euro trading right now. It's $1.1740. So what are we looking at here? Well, so far we have been trending lower now for a little while. Now we had a head and shoulders formation that was completed last week or a couple weeks ago. So if you can see this now, it's a little bigger here. Here's our head up here, and here's our two shoulders. Here's our neckline, which was violated. Now we're trending below that. So now let's see what we're looking at. So we have a short-term downtrend. The market's been trading lower since September. We're in a temporarily have a corrective move higher. Now the question is this the beginning of a basing, and are we going to still bring back those dollar bears and those euro bulls? Well, there's some funky stuff going on in the interest rate environment between the euro bobble and the euro shots, and then our US 30-year and 10-year and 2-year notes. And with those acting the way that they are acting, it's really difficult for the currencies to get some radical moves against the dollar, meaning that the interest rate variable, which is a component of currency pricing, is kind of holding back the euro. And then we have some other things that are going on, somewhat neutral to lower oil prices and a couple other commodities that are now falling backwards. So what we're going to look at here, it's really important, is to notice this. When we made this high for the head, we had established a lower move low. Then we established a lower move high, and we continued to establish lower move low, lower move high, lower move low, and right now we still are currently have not made a higher move high, so that we are establishing either a lower move high or we're going to break out to the upside. So I would say that only if we can get above this neckline, which will kind of be support for a continuation or sideways to slightly bullish outlook. But right now, I don't think that that's going to happen. So let's see, what are we looking at for as far as retracement levels here? So if we just take a standard fib level off of this move from the beginning of the summer up to here. Okay, let me move this over here. Okay, now I can see it. Okay, so as you can see, as far as downside targets on a fib basis, here's our 50% level. Came very close to that already, that we almost touched, and now we're trading above that. so that's kind of a key area. So now we know that this low that was set last week around $1.1614, this is going to be our big downside sell-off level. If you are a bull, I would be very leery trying to hold on to a long below this level. First of all, if we fail from here, that confirms lower move lows after a lower move high, which is just basic confirmation of a bearish trend and continuation of the trend. So use cautious. If you're an aggressive bull, I would be very leery, like I said, of being long below 116.14. So the 115.92 area also, this would be our 50% threshold from this big move that goes back from here. It's from the middle of July, or excuse me, end of June before July. So that was our last basing period. So on a short-term basis on the Fibonacci level, we've come to basically bounce just shy of a really good area. But I don't believe that right now, since the trend is your friend and lower move lows and lower move highs are indicative of continuation of that said type of pattern until something else acts upon it. So we don't have any real reason to deal with that right now as far as what would be bullish to euro, because we have a lot of trade deals and there's recessionary talks there. Obviously, they had some very good economic numbers that have surprised lately over the past few days. So that's the biggest component in the dollar index that's helping to hold it back. But right now, the dollar index in itself is kind of in a corrective mode. It's been rallying for the past month and a half. It's no reason not to have a little digestion. Now, here's where I say, I think the euro and the other currencies are just in a corrective move and getting ready to run out of gas. So the British pound here has been making consecutive lower move lows and lower move highs as well. So this low, this bottom at the same time around a week and a half ago, and I think this also is another market where you have to key off of these lows. If you are an aggressive bull trying to buy into this, if you think it's just a corrective move that is now ended and we're going to have a bullish rally against the dollar and the pound, well, then you're in a good area, I guess. But if you are still long below $1.2672, you're not just taking heat, you're also getting screwed by not following the trend. So I'd be very careful if you're already aggressive. If you're just getting into the long trade, I would be using caution. And if you got in lower, especially closer to this $1.26 area, either take some profits off the table or definitely keep your stops tight, because I would be very leery of because you could have a very quick sell-off. The pound, when it breaks or rallies and has an excessive move like it did over here, you can see the kind of volatility. Like tomorrow is a Friday going into a weekend where we have a whole bunch of things going on geopolitically all across the globe. And I think that as a whole, that's most likely going to weigh on the British pound. I don't see it gaining a lot of strength unless you get a real big uptick in oil, which I don't see happening. Now, of course, on the longer term, if you look at this, perhaps, if we go all the way back to here, we're just coming into this little spot here where we have support possibly coming in for this to bounce. And then we also had this symmetrical kind of slide here from the middle of June into the end of June. And then we had this big rally. Not quite as significant as this slide was here, but very possible. You know, if this is the bouncing point, this could be the aggressive area for a nice long. I just don't towards this $1.34 or $1.36 area or anything like that anytime soon. There's just too much between trade deals and other things, not to mention Northern Ireland conflict problem brewing now, and there's a whole can of worms in the UK that just just start asking for instability. You got an aggressive buy going on here, lower on the day, kind of quiet right now. Let's figure this one out too as far as a move. So if we just take this last wave higher on a fib basis, all right, let's move this over a little bit. So where do we get to? See, now this is another thing too, is on a fib basis, you are kind of looking at where we might want to have a bounce. So there's an argument for the bears, because here's your 0.618 level, which that we pierced, and now we've stayed above it. This is another reason why, since we have this level as 0.618, if you fail at 126.72 here and you're long,